Hi everyone, welcome back to our channel. Today, we're going to talk about a topic that often overlooked but incredibly important. Our topic for today's video is how to protect life insurance to creditor in Canada. Protecting life insurance proceeds from creditors involves several strategies that depend on the type of policy, ownership, and the named beneficiaries. Here's how you can safeguard your life insurance from creditors. Number 1. Name beneficiaries protected under Canadian law. In Canada, life insurance policies are generally protected from creditors in the policy names certain types of beneficiaries. These beneficiaries include spouse, child, grandchild, and parents. When one of these family members is named beneficiary, creditors typically cannot claim the death benefit. This is because Canadian insurance laws, especially under provincial legislation, protect the death benefits from creditors as long as the beneficiaries fall under these categories. Important consideration: naming your estate as a beneficiary may expose the death benefits to creditors' claims. It's essential to name specific individuals, your spouse, children, parents, or grandchildren, to benefit from this protection. Ensure that the beneficiary designation is irrevocable or clearly defined to prevent disputes or challenges from creditors. Number 2. Irrevocable beneficiaries. What it is. An irrevocable beneficiary is someone who, once named, cannot be removed as a beneficiary without their consent. Designating an irrevocable beneficiary can protect the life insurance policy from creditors because the policyholder no longer has control over the death benefit. Protection. Since the policyholder cannot change the beneficiary or access the cash value without the irrevocable beneficiary's permission, creditors are less likely to claim the life insurance proceeds. Number 3. Use of segregated funds. What they are. Segregated funds are investment products offered by insurance companies in Canada that have both investment and insurance components. These funds typically include a life insurance death benefit. Protection. Segregated funds offer creditors protection similar to life insurance policies when a family member's spouse, child, grandchild, or parent is named as the beneficiary. This protection extends to the investment assets held with a segregated fund, shielding them from claims by creditors. Beneficiary designation. Just like life insurance policies, segregated funds should have a named beneficiary who falls under the protections categories to ensure creditors' protection. Number 4. Set up an irrevocable life insurance trust. What it is. An irrevocable life insurance trust is a trust created to own and manage a life insurance policy. In Canada, setting up a trust to hold life insurance can offer additional protection from creditors. How it works. Once you transfer ownership of the policy to the trust, the policy is no longer considered your asset and creditors cannot claim it. The trust manages the policy and the death benefit is distributed to the beneficiaries upon your passing. Benefits. This method keeps the life insurance policy out of your estate, preventing creditors from accessing the proceeds. However, you lose direct control over the policy once it is placed in the trust. Number 5. Transferring policy ownership. Transfer ownership. One way to protect your life insurance from creditors is to transfer ownership of the policy to a trusted family members, such as spouse or children. By transferring ownership, the policy is no longer considered your asset, and it would generally not be subject to creditor claims. Caution. First, when you transfer ownership, you lose control over the policy. Second, this transfer could have tax implication depending on the situation, and once transferred, the new owner can make changes or surrender the policy. Number 6, corporate-owned life insurance. For business owner, if you are a business owner and have a life insurance policy owned by your corporation, you can protect it from personal creditors. In this case, the policy belongs to the corporation, not the individual, so personal creditors cannot access it. Considerations. It's important to work with a tax advisor to understand how corporate-owned life insurance works, as there are different tax and legal implications compared to personally owned policies. Number 7, bankruptcy protections. Exemptions in bankruptcy. In Canada, life insurance policies are often exempt from creditors in the case of personal bankruptcy if the beneficiary is a protected family members like spouse, child, grandchild, or parents. Cash surrender value. While the death benefit is usually protected, the cash surrender value of a permanent life insurance policy may not be fully protected. This cash value may be available to creditors in some situations unless a protected family member is the irrevocable beneficiary. Number 8. Avoid naming your estate as beneficiary. Risk of exposure to creditors. If you name your estate as the beneficiary of your life insurance policy, the death benefit will become part of your estate. In this case, creditors can claim the death benefit to settle outstanding debts during the profits process. Solution. Always name specific individuals, such as your spouse, children, or other protected family members to ensure creditors' protection. Key steps to protect life insurance from creditors in Canada. Number 1. Name protected beneficiaries. Ensure your beneficiary is your spouse, child, grandchild, or parent. Number 2. Consider using segregated funds. These offer creditors protections and life insurance benefits. Number 3. Establish an irrevocable life insurance trust. Remove the policy from your estate and protect it from creditors. Number 4. Avoid naming the estate as beneficiary. Name specific individuals to prevent creditors from accessing the death benefit. Number 5. Transfer policy ownership. Transfer policy ownership of the policy to someone else with caution. Number 6. Understand provincial laws. Life insurance protections vary by province, so ensure you are familiar with your region's rules. By following these tips, you can effectively shield your life insurance policy from creditors in Canada and ensure that your beneficiaries receive the death benefit without facing claims from creditors. Consulting with a legal or financial professional is recommended to tailor the strategies to your personal situation and ensure compliance with local laws. Thank you so much for tuning in today. If you found this video helpful, please give it a thumbs up and don't forget to like, subscribe for more informative and inspiring content. Until next time, stay safe and stay healthy.